Okay, so let's have a look at part 3 from the 2021 question, Fauci PLC, interpretation of accounts. So it's saying we have to calculate the current market price if the P ratio is 12. So let's have a look and find what our P ratio looks like. So the price earning ratio. So your P ratio is your market price per share. That's what we have to calculate, divided by your earnings per share. It's usually given in years, and this shows how long it will take a shareholder to get their investment back, and it's expressed in years. So two ratios that you need for here. We need to know the P ratio, but we also need to know the earnings per share ratio as well. So your earnings per share ratio is your net profit after preference dividends paid divided by your number of ordinary shares. It's usually given in cent, and this ratio shows the profit coming from each ordinary share. It's expressed as a percentage and shows the investors how well their investment is being used. So we're going to have to use this formula first to find the EPS, and then to find the market price per share, then we're going to fill in the information we know for this formula. So the earnings per share, net profit after preference dividends. So let's have a look at the question and see how much our net profit is. So our net profit is 39,000. It's after our preference dividends, so we have to find out how much our preference dividends is. So it's 8% or 9% preference shares multiplied by 9,000. So that's going to give you, or multiplied by 100,000. So that's going to give you 9,000. So your preference dividends is 9,000. So net profit after preference dividends, we need to take our preference dividends away from it because they're going to be paid back anyway, no matter what. We have to pay them back. And then we're going to divide all that by our ordinary shares, so how much shares we've issued out. So our ordinary shares is 200,000. So it's 39,000 minus 9 divided by 200,000. So it's going to be 30,000 divided by 200,000. So it's going to give us 15 cents. So our earnings per share is 15 cents per share. So then your market value then, so we're going to have X, that's what we have to figure out. So the P ratio, so the P ratio is equal to 12. So it's your market price per share divided by 15 cents is equal to 12. So we're going to bring the 15 cents over the equal sign. So if it's division on this side, it's multiplication on the other side of the equals. So X is equal to 12 multiplied by 15 cents. So your market price per share is going to be equal to 18 cents. So a couple of things involving that ratio. Our ratio for P ratio, our price earnings ratio is your market price per share divided by earnings per share. We need to calculate what our market price per share is. But before we do that, we need to calculate what our earnings per share is. So earnings per share then is your net profit after dividends divided by ordinary share issues. Our net profit is going to be given in the question. Our ordinary share issued is going to be given in the question. We need to calculate how much we're paying to our preference dividends. So from the question, preference dividends is 10,000. Multiply that by 9%. That's going to give you 9,000. So it's after preference dividends, we're going to take it away. So 39,000 minus 9 divided by 200,000. 30,000 divided by 200,000 gives us 15 cents. So your earnings per share is 15 cents. Now in the question it says your P ratio is equal to 12. So this formula here is equal to 12. So your market price per share, I'm just going to have it as X, divided by 15 cents. That's what we calculate up here above, is equal to 12. So X is equal to 12 multiplied by 15. So we're just bringing the 15 to the other side of the equal sign. If it's division on one side, it's multiplication on the other side. So that's going to be 12 multiplied by 0.15. So €1.80 is the market value per ordinary share, or market value of the per share.